Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market and see what is happening and what we can expect moving forward. So as usual, if you enjoy the video, don't forget to hit that like button. It does help a lot. I am not a financial advisor and this is not financial advice. And of course, my membership section on YouTube is live. If you're interested in joining, the link is down below, just $3 a month. And essentially you get my intraday thoughts on Tesla as it moves throughout the day and essentially update you guys, kind of like I do with this video, but incrementally and throughout the day live as the stock is moving and trading essentially. So you get it real time right then and there. So link is below if you're interested. Moving into a Tesla, closing the day ever so slightly down, really. I mean, hardly down, pretty much flat on the day, which isn't, it's not really a good thing or a bad thing, right? Pretty much closing at 257, we'll just say, to make it even. Now, compared to the market itself, Tesla, of course, a bit of an underperformance, but nothing too substantial. So what does it mean? What can we expect moving forward? Unfortunately, there's not that much to update on today in terms of just overall movement, right? I mean, of course, naturally, as you can see, we have a wake that essentially is kind of a tug of war, right? We had the bulls push through with the bears defending it, and then the bears pushing through with the bulls defending it. But ultimately, what it came down to is the fact that we pretty much closed at essentially the same level that we closed at yesterday, which unfortunately is exactly right on the 50-day moving average still. And we're definitely finding a little bit of issues, like I said, in this overall region. I've been telling our members that on yesterday's candle, how I personally expect some sort of sideways correction here, or at least some consolidation, some cool off, if you will, which can definitely also include us coming back down to about the mid to potentially low-ish $240 per share area as well. Now, the fact that we did go way above it and actually peaked our head ever so slightly into the 260, but then got smacked back down to pretty much closing right at the 50-day moving average isn't the best thing in the entire world, showing that this is, of course, a massive area of resistance, a massive area that bears want to defend. And of course, this whole situation that happened right over here, where after we fell after earnings, we had a massive consolidation in this area, pretty much had a lot of support support around this area that we're now finding rejection and of course ever so higher than that, around 267 to 270 was like the major area of resistance that, even if we get past this kind of low 260s area, we still have that 267 to 270 area, which of course happens to also be that massive area of Fibonacci resistance that I've talked about many times. That personally, to me, in my eyes, is probably the most important part, or I guess area, if you will, of this potential dead cat bounce or potential overall reversal. At the moment, I look at it as nothing more than a potential dead cat bounce, right? Massive sell off from earnings, get a bit of a relief rally, and then we continue on potentially, right? Of course, it's potentially, right? And again, the way I view this dead cat bounce to be nullified and essentially turn into a potential reversal, which is a good thing for bulls, is breaking above the 618 Fibonacci level, which again, 267 to 270 roughly is that crucial level. Now, we broke above 245, which is a 382, which is kind of like the first boss, the second boss being the 0.5, which is kind of roughly where we're closing out right now, which is pretty much around 256 roughly. Right, you can see it's kind of where we are at right now. And the final boss, of course, is 268, which again, like I said many times yesterday, I'll repeat it once again. If we break through it, that to me tells me that the reversal is most likely taking place. And this downtrend that started from earnings should be in theory complete, which is going to be great news for the bulls. Bad news for the bears. Now, RSI is looking still great. The MACD is still looking great. Beautiful little cross over here, still looking overall bullish, right? Making higher highs and everything like that. But keep in mind, right? Even if it's making higher highs and crossing bullish, keep in mind how it looked like back over here, right? Beautiful rally. Same thing here. It crossed bullish. We started making higher highs, but then ultimately, we started making a little bit of lower lows, came back down, cooled off a little bit before we started making our way higher. And I wouldn't be surprised if something like this happens here as well, where we kind of chill out a bit here, make our way down on the MACD as well, go a little bit lower, kind of, the green line comes back to the red line, roughly close to it, kind of like a retest almost, if you will. And then from there, I think is where we continue making our way back up after that situation is finished. So in other words, to look at the stock and kind of repeat what I just said, that kind of makes hopefully more sense. I expect something along the lines of, maybe some consolidation, could just be straight up sideways, but I would not be surprised if we do move down a little bit, come down to about the 240s, 243, 242, somewhere around there, come back to retest the 21 EMA, come back to retest this area that we had a bit of issues over here. You can see, breaking above, which is the high 230s, right? Just somewhere around that level. Wouldn't surprise me if we make our way there, maybe consolidate a tiny bit for September. And then I think from there, assuming of course it holds, I think we'll get one actual real test and attempt to break through this kind of 267 to 270-ish level. Even that's option one, of course. Let me go ahead and remove this. Option two is very similar. Even let's say in theory we actually do rally, and let's say we do break above the 270 level, and let's say we come up to around this kind of 277, almost 280-ish level. Same concept. I still think we'll from there probably come back down to somewhere around this kind of level now that we are currently finding resistance in, maybe even lower. But ultimately, this will be a good sign because this will make the reversal, in theory, begin, right? This downtrend's finished, reversal begins, and then of course we ultimately go even higher, right? One of those two paths is kind of what I expect. Now, keep in mind, we only have 1 day left of August, right? August is of course an overall, good month for Tesla, but unfortunately September is next, and you can see September, October, very bad months for Tesla, and September a very bad month for overall the market itself. But with that being said, that doesn't mean that it has to be a month where you just straight up crash, right? Absolutely, it does not have to mean that whatsoever, right? So just keep that in mind. It could just be a small little dip. It could be like a 5% dip for the month. That doesn't have to be anything crazy, right? Overall for the month, relative to where you start to relative to where you finish. Doesn't mean it has to crash. Doesn't mean it has to be a massive dip. Just keep that in mind. But it is supposed to be an overall weak month for the market, and we gotta remove this quickly. And for Tesla itself. So just take that for what it's worth, which is why I wouldn't be surprised if this is where we kind of, find a bit of a short-term top, get a cool off, come back down a tiny bit to 240s, hopefully hold, and then make our way hopefully back above 270, which is again crucial. Now, let's talk about a bit more of the bearish side. Let's say we don't ever break above 270. Let's say we just, for whatever it's worth, maybe now, maybe later, but overall, whether it's now, whether it's in a month, we can't break above 270. Well, that's where things start getting a little bit more concerning, because the bulls, again, like I said, really want to break that, because if we don't, this is where I still personally view this overall bear flag potentially to be still very, very valid. And I really think that there is still a decently strong possibility that it plays out, right? Doesn't mean it has to. And in my opinion, if the bulls can break above 270 and start holding above 270, it makes this much more of a difficult pattern to break out. But as it stands, this is still a very valid pattern where we have the pole right here, we have the bear flag right here, which, keep in mind, on the weekly, if we take out the Fibonacci one more time from this overall all-time highs to the recent very low lows that we had at about 100, right? We did come up exactly to the 618 level, that crucial level I'm talking about on the daily. And this time, of course, it's on the weekly, but on the daily, right? That's what we talk about it. Same concept though. The bulls defend, or rather the bears defended the last resort, the last level of defense, the final boss, if you will, which is that 0.618 level. We came up to it right here, you can see, and we did get a severe rejection from that as well, right? Post earnings. So take it for what it's worth, ladies and gentlemen. It's a very crucial area, very important to understand the fact that this is still a very real possibility. So that's why I bring out the Fibonacci all the time, and that's why that 0.618 level that I just pointed out is extremely important, because that's that same level here, except it's the 268 to 270 roughly level for the daily chart instead. So same concept, just on a smaller time frame and on a smaller overall trading period, if you will. Very important to break through. Now, overall, let's take a look at the option flow. Where's the option flow? Right here. We're going to open that up. Let's take a look and see if anything has changed. And you can see, compared to yesterday, definitely a little bit more red bubbles. I actually looked at it about almost 2 hours before market closed. A lot less red bubbles than I'm seeing here. I actually posted it to my members. So we can take a look at it right here. We can compare. So this is what it looked like right before. This was about 3 hours ago, right? This is what it looked like 3 hours ago, right? And this is what it looks like now. So keep that in mind, right? Definitely some bearishness starting to flow in here a little bit, right? It's definitely looking a little bit more bearish now, right? Some, puts and whatnot flowing through. People are starting to, take maybe profit on their bullish positions, starting to close them out and starting to enter some bearish positions come September, right? Like I said many times, it's a horrible month for the market. I've learned that in the past in a very rude manner, let's just say. It was a very hard lesson to learn. Now, that's kind of the main overall thing that I'm looking at right now. There's really not much more to talk about, right? We have the open order blocks, right? We have sell blocks up here. We have buy blocks sitting pretty much around the low 230s. Take that for what it's worth. I don't think it matters too much right now, as we're not that close to any of them as well. We're above the VWAP, which is pretty decent as well. I don't put too much weight into that, but we are above it for people that do care. And let's go ahead and remove the 50-day moving average, which we are still getting rejected at. The 21 EMA we'll keep, actually no, we'll take it out for now, and we'll put up a Bollinger Band, right? You can see the Bollinger Bands rather. Not really much to say here as well. We're pretty much trading in between. It's not really tight. It's not really expanded. It's kind of neutral. So not a whole lot to talk about there as well. Oops, the volume should stay. I don't know why I took that off. The volume profile, you can see, right, as we're entering this kind of area, we are starting to enter some pretty high volume area, which of course is unfortunately acting as a bit of a resistance. But if we can pass 263 and especially 270, you can see the volume really starts to get a lot thinner, and it'll make it a lot easier to start making our way further up after that, assuming of course it happens, which is why in my opinion that level is extremely important. The squeeze is not really showing anything right now, though the bars have of course retreated back to a neutral position, and that's usually where you see these red circles start to form, which implies the squeeze potentially is forming. I still think it'll take some time before we start getting these red circles, but assuming we start consolidating from here, not really doing too much, kind of 250s, 240s, and just kind of going sideways, let's say for even the most of September, I definitely think we're going to start forming a bit of a squeeze situation over here on this indicator, and that's going to probably set up for the next massive move that's going to be building up over the course of that month. So that's something to definitely slowly start paying attention to, but as of right now, nothing of important to note. But there's really not much more to talk about, ladies and gentlemen, so let me know what you think down below. Unfortunately, today was a bit of a snooze fest of a day, not a whole lot happened, so yeah, so hopefully this video at least was still somewhat informative in one way or another. But yeah, all in all, again, most important level 267 to 280, 267 to 270, very crucial level to defend. But as of right now, we're still kind of getting rejected at the 50-day moving average and the 0.5 Fibonacci level, which isn't the worst thing in the world, but it's not the best thing in the world either, right? We're not really seeing too much confirmation one way or the other because we keep closing and dancing right around those indicators. So we need a bit more of a confirmation, and right now we're just simply not getting it. So I think some patience is required for this one until we do get a bit of an extra or more obvious, I guess, confirmation that we can be more confident in overall as well. But all in all, thank you so much for watching. If you enjoyed, don't forget to hit that like button, and of course, as usual, I'll see you for the next one. Peace.